You ever look at a stock market chart and just see, well, chaos? A wild, tangled mess of ups and downs that makes no sense? What if I told you that underneath all that noise, there might be a hidden pattern, a rhythm? Today, we're going to dive deep into the Elliott Wave Principle, a really fascinating and, yeah, pretty controversial theory that says the market actually moves in predictable, repeating waves.
So, our story kicks off back in the 1930s with a guy named Charles J. Collins. Now, Collins was the editor of a popular investment bulletin, which means he was just constantly flooded with letters and people showing up at his door, all of them claiming they had the perfect system to beat the market. He'd pretty much seen it all, and let's just say he was a tough man to impress.
You know, Collins had this standard test he'd run. He'd tell the person, okay, put your predictions on the record. And almost every single time, the system would blow up and he'd never hear from that person again. But over his entire career, there were a couple of times that were different. And one of them was about to change the game completely.
All right, picture this. It's March 1935. The market is in freefall. All the classic indicators are screaming sell. The fear from the 1929 crash is still hanging in the air. Then, a telegram lands on Collins' desk. It's from a man he'd been in touch with, an R.N. Elliott. The message was blunt, almost arrogant. The market break is over. And while Collins is reading this, the Dow is already starting to climb. But here's the kicker. The timestamp on that telegram, it was sent 2 hours before the market hit its absolute rock bottom. 2 hours!
So you got to be asking the same thing Collins was, right? Who was this guy? And how in the world could anyone make a forecast that was so precise it called the bottom of a crash literally to the hour?
And here's the craziest part. R.N. Elliott was a total outsider. He wasn't some Wall Street wizard. Not even close. He was a former wireless operator who had to retire early because of an illness. And just to keep his mind sharp, he started poring over 80 years of stock market charts. He was a total novice. And you know what? That turned out to be his secret weapon. Because he didn't have any of the old conventional ideas cluttering up his brain, he saw something that everybody else had missed.
And what he discovered was something he called the wave principle. Elliott basically said that all those seemingly random ups and downs in the market, they're not random at all. They're actually just pieces of a huge rhythmic system, a pattern of waves and cycles that just repeats over and over and over again.
So how does this actually work? Well, the most basic building block, especially in a bull market, is what he called an impulse move. And it's pretty simple. It's made up of 5 distinct waves. 3 of them, waves 1, 3, and 5, are the ones that push the market up in the direction of the main trend.
But you know, for every action, there's a reaction. So after that 5-wave push is done, it's always followed by a 3-wave corrective move. You see it here labeled A, B, and C. That's the part that moves against the trend. And those 2 parts together, the 5 and the 3, that's one complete cycle. 5 waves up, 3 waves down.
And this constant dance between the impulse waves pushing forward and the corrective waves pulling back, well, that's what creates the market's natural rhythm. It's like taking 2 steps forward and 1 step back, a constant cycle of making progress and then consolidating.
Okay, so you think that's interesting? Well, get ready, because this is where the theory goes from kinda cool to truly mind-bending. Elliott figured out that this 5-3 pattern wasn't just happening on one single time scale. Nope, it was happening at every scale.
I mean, just look at this. You can see how each of those big, major impulse waves is itself made up of 5 smaller little subwaves. And each of those subwaves is made up of 5 even smaller waves. The pattern is what's called a fractal. It just keeps repeating, infinitely, whether you zoom in or zoom out.
It's really an idea of incredible symmetry. The exact same pattern that's driving the tiny little wiggles on an hourly chart is also the engine behind the massive bull and bear markets that can span for decades. It's like a wheel within a wheel, this repeating design just woven right into the fabric of the market.
And this table here gives you a sense of just how big this idea is. Elliott gave names to all these different scales, or degrees of waves. They go from the tiny ones that might last a few hours, all the way up to something called the grand supercycle, which can cover more than 50 years. And the crazy part is that basic 5-3 rhythm applies to every single one of them.
So how do people actually use this stuff today? Well, what analysts will do is they'll take a real-world chart, like this one, and they'll start trying to identify and label the waves as they're happening. It's all about figuring out where the market is right now in that larger cycle, which can give them a clue about what's likely to happen next.
Now, it is so important to get this next part.
This is not a crystal ball. It doesn't give you winning lottery numbers. As one writer put it, its real power is that it trains you to anticipate what might happen, instead of just following the herd like everyone else. It's a framework for thinking, not some magic formula.
The real value here is the shift in mindset it forces you to make. You have to stop thinking in terms of being right or wrong. You learn to accept that sometimes the really improbable stuff can and does happen. You use the wave patterns to get a better handle on risk versus reward. And maybe most importantly, you learn to anticipate where the market is going, instead of just reacting to where it's been.
Which, it leaves us with one last really big thought to chew on. The wave principle seems to suggest that these market patterns are really just a reflection of human psychology. Our predictable swings from euphoria to despair, and then all the way back again. And if that's true, are these waves really just patterns on a chart, or are they a reflection of our own nature, a ride that we're destined to repeat forever?